Hi, this is your video tip of the day on the ongoing question about when should you use a professional and pay for professional services on the subject of accountants. Accountants are very handy and they can solve a lot of problems. They keep you out of trouble with the tax man. They give a comfort level to investors. Banks love them, okay? But one of the things you have to understand, when is the appropriate time? And if you have the time and the skills to be able to do QuickBooks or something like that, or somebody on your staff, even if it's part-time that does QuickBooks, you'll save a lot of money at the accountant office. So you need to, think about that for doing your day in and day out, and then produce reports that your accountant can look over and certify or validate or verify and those kind of things, and you'll save yourself some money. Otherwise, you can take shoe boxes of receipts, and your accountant can do that for you as well. They paid the bookkeeper to do it, and they charge you double. So that's one of the ways that you can go. When it comes time to, other institutional types of funding or later stage fundings, you have to have an accountant involved. And there's a difference between a audited statement or a reviewed statement or a statement with comments. And all those take levels of weight of how much the accountant was involved and certifies the correctness of the information. And when it comes time to forecasting, sometimes if you're not really good with spreadsheets, you want to make sure that your accountant can put that together for you, take your expense items, take some of your budget items, and put that in place for you. And one thing to make sure after you've paid them all that money, make sure that it's in a format that you can use and you can manipulate and modify as going forward, so you're not dependent on that accountant all the time. So you want to have it on Excel, or you want to have it on some spreadsheet that you have the ability to open up in your system and work with. Okay, so that's your video tip of the day.